Recent conference with banking and financial company CFOs, the RBI raised a red flag against instances of internal accounts being misused. Ritu Singh is joining us with more details on what the conversation was around. Ritu.
Well, thanks for that, Sonal. The Reserve Bank of India again highlighting and raising concerns about, certain regulatory compliance lapses and other issues, raising concerns about certain banks without naming them, having lakhs of internal accounts which could be misused if not checked. Now, this was during an interaction with CFOs and auditors of banks and other financial institutions yesterday, where Deputy Governor Swaminathan said that RBI had found that certain banks had lakhs of internal accounts with apparently no valid reason. He said that some of these accounts were used as a conduit for fraudulent transactions and evergreening of loan accounts. Internal accounts are essentially accounts which exist within an organization, and they're used to transfer funds between the business units. So the Deputy Governor asked bank CFOs to bring them down to an essential minimum number and exercise greater control over them, because he said they are high risk in nature and have potential for misuse. He also urged the CFOs to invest in technology and data analytics and overall just do more to protect the integrity of financial reporting. Now, at the same event, you also had Deputy Governor M. Rajeshwar Rao, who stressed that disclosures were fundamental to transparency and urged lenders to improve the quality of their disclosures. Now, he highlighted that RBI's principle-based regulatory approach, for instance, asking auditors to thoroughly understand them in the first place and then ensure compliance with not just regulations but also their regulatory intent. Now, Deputy Governor Rao also pointed out that the implementation of principle-based guidelines in NBFCs has been found to be lacking, and he gave several examples. For instance, he said NBFCs' accounting disclosures often merely repeated the text of the accounting standards without really giving any insight into the assumptions they made or the methods they used in measuring the expected credit loss. In another instance, he said, ARCs, for instance, did not make any provision for management fees and expenses which remain unrecoverable for more than 180 days while they were calculating their capital adequacy ratios. So to sum up, RBI again cautioning banks to tighten controls and not misuse any regulatory flexibility that has been accorded to them.
Thank you so much for that, Ritu. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.